everyone. Welcome to another episode of In Conversation by Advisor Coach. Today in conversation, our guest is Mr. Gaurav Goyal, National Head Sales and Marketing with Canara Robeco Mutual Fund. Welcome, Gaurav, once again to In Conversation today.
Thank you, Suren. Thank you for this opportunity.
Our pleasure. So, Gaurav, a lot of action is happening in the industry, and one very, very good action which happened with the Canara Robeco Mutual Fund is that you achieved a milestone of 1 lakh crore of AUM. So, how does that make you feel?
No, absolutely. I think it's a very proud moment for all of us at Canara Robeco. And in our journey, this milestone is very, very close to our heart. Having said that, I think industry is growing and we will continue to grow. But I think very, very satisfying for us is when you look at in terms of how we have been able to achieve this growth. And this is across the fund. So it is not about, one or two funds doing the heavy lifting in terms of the AUMs, but it is very well. We are very happy that this is across different fund strategies, and today now we have 12 equity fund strategies. We have 2 hybrid fund strategies. We have another 10 fixed income strategies. So it's bouquet is there for investors to choose among various strategies which has been there. Also very satisfying that when you look at this entire growth, this is across all the channels and all the distribution partners. Across all the geography. So this is a very, very proud moment for us.
Wonderful. And I think it's an elite club of 1 lakh crore of above an AUM, to be into. Our heartiest congratulations to you and the entire team at Canara Robeco.
Thank you very much, sir.
So there is a lot of action happening in terms of the huge inflows which are coming into the equity schemes as we are speaking. On the 12th of July, recently, you have launched your Balance Advantage Fund. So there are already 33 schemes in that particular category managing close to around 2.7 lakh crore of AUM. So why launch a Balance Advantage Fund now?
The Balance Advantage Fund, I think, can be offered at any point of time. I think one, as I said, from our perspective, we constantly evaluate in terms of what are the needs of the investors, customers, and what kind of products and solutions which we should be coming out with. And in the last few years, I think we actually filled some of the existing gaps which we have with multi-cap fund, with recent funds in terms of manufacturing, mid-cap, and those kind of funds which we felt that are very, very important from investors' portfolio perspective. And of course, Balance Advantage Fund category, I think that is something which is an evergreen category, and it's a strategic product. So it's not in terms of that at this particular timing only which we want, but of course it is a very good timing, because what we believe right now, when there is a concentration of flows, I would say in the industry, particularly in the equity, towards the thematic and the high risk products, then from an investor portfolio perspective, I think this is a very good opportunity and good time to look at this asset class and also diversify our flows and AUM across these kind of strategic asset allocation products.
Absolutely, I totally agree. But when you look at the Balanced Advantage Fund as a category, you find uniqueness in particularly all the models which are running today in the industry. So could you also talk about Canara Robeco Balanced Advantage Funds, its core model, its investment strategy?
Yeah, sure. So, we actually, our investment team has really worked, last 1.5 years on in terms of determining and deciding on the final model to play. And I think one of the advantages in hindsight, I can say that since we came at at a later stage, we had the benefit of taking the benefit of the learnings from other models, because there are a lot of models in different market situations have not really done justice to what they were supposed to. And therefore I think we have incorporated all those learnings, and finally then we zeroed on one 3-factor model. And that 3-factor model includes, one, of course, the price to book value, which is a very stable indicator and denotes the balance sheet strength of the company. The second is the price to earning. And the real change which we did is that, okay, when we look at this price to earning model indicator, we actually took the forward price to earning model in our model. So that will give you earning, what are the earning estimates for the next year, and therefore then you can build in more realism and also participate in that earning growth momentum in the market. And the third is the equity risk premium, which is basically, which gives you education in terms of between the debt and equity, which is the asset class which is more expensive, which is more cheaper, and where you need to
Very
allocate
true.
more, and which is nothing but the difference between the earning yield and the bond yield. So based on these three factor models, then we decided, we actually back tested that entire model, and we said that okay, I think the kind of results which we were looking at, we were able to get with this three model, and we actually done our back testing over last 20-year period. So it's not only about like 5-6 year period, but 20-year period, which where we have seen enough cycles, and markets have seen enough volatility. So based on that, this model is going to guide on the basis of what kind of equity allocation the fund manager will be taking in this portfolio. From an investment strategy perspective, the way we will look at the portfolio would be predominantly on the equity side, minimum 70% large cap. So it will be like a flexi cap strategy where we'll have the best of all the worlds with large cap, small cap, mid cap being there. But predominantly it will be large caps, more minimum 70%, and up to 30% could be small cap and mid cap. On the fixed income side, definitely we do not want to take any credit risk in the portfolio, so we'll not go down the yield curve in terms of the credit rating. So it will be all AAA rated and AA plus kind of portfolio which we will build in, but it will be focused more on the equal side, and then we will play a very active duration as well. Like a like a corporate bond fund and a short-term fund, depending upon what the view of the fund manager would be. So in net, from an investment strategy perspective, it will give the benefit of on the equity side of flexi cap strategy. But the beauty about that would be that the fund manager will be able to move it dynamically, depending upon the market valuation. So it will not be in a static portfolio. And on the fixed income side, it will be more focused on the stability, accrual, and managing it, actively on the duration side.
No, very rightly said, because Gaurav, this product actually, fits into a different risk asset allocation in a client's portfolio. So when you talked about, back testing as back as 20 years, it's a fairly long time. And I'm sure the results must have been very, very encouraging for you to go ahead with launching this model in the investment strategy. And of course, very high quality, like you mentioned, 70% in large cap, and also completely being on the AAA side, on the credit side of the fixed income as well. So in this NFO, you will also launch your auto switch and smart STP as a feature. Could you tell our viewers more about that?
So yeah, of course, one of the investors, when we speak to our investors and partners, one of the requirement was that since the NFO period is there for the 2 weeks, and investors, those who are investing at the initial period in the NFO, they actually lose out on the returns of a debt fund, or if they have parked that money in their bank deposit. So what auto switch enables is again win for the investors, where they can actually park that money in any of the select debt fixed income schemes, and on the last day of the NFO, that amount gets switched to the NFO, to this account. So clearly for those 2 weeks particularly, the investors can continue to earn an interest of a debt fund. They don't lose out on it, and there are no hassles, because on the last day of the NFO, then it gets all the money from the fixed income funds get switched to this fund. So that's the auto switch. The smart STP is basically, a lot of investors, those who want to stagger their investment over a period of 3 to 4 months. So for that, we have introduced a smart STP, wherein you can actually park your 100% money in any of the fixed income schemes. And from there, you can actually do a smart STP, which means that 25% of your money will get invested into the NFO, and the rest 75% in 3 equal installments of 25% each over a period of next 3 months. So that gives them a staggered option.
Well, that's a very interesting one. 25% moves in right during the NFO.
Right into the NFO.
Right. And 75% in a bucket of 25% each.
25% each in the 3 equal installments.
And that installment the investor can choose, or how does it work, Gaurav?
So it is, So I think if you're looking at a smart STP, then it has been inbuilt, so that the customer need not to worry about in terms of what I need to do, or how much I need to do. So it's very simple, 25% every month.
In your last NFO also, you had the smart STP feature. So how many investors probably would have opted for this?
So I think, yeah, means,
It's a very innovative one.
correct, absolutely. So I think both auto switch and smart STP is more from a perspective of giving an option to the investors,
That's right.
and because that is what the feedback which came in from our investors, that okay, yes, while we are looking at investment in the NFO, but we also wanted to stagger it, and from a timing perspective. So particularly for those kind of investors, we introduced that. So we got a very good response for both the schemes.
Wonderful, wonderful. It's certainly a very, very interesting one, both auto switch and the smart STP. So, how are you promoting the hybrid fund as a category with distributors? What initiatives have you taken, Gaurav, at Canara Robeco Mutual Fund?
So, of course, I think this category, balance advantage fund category, although not new, to our distributors and investors, and we are already about 2.75 lakh crore as far as the industry is concerned, and as you rightly said, there are already 30 funds which are there in the industry. But still, when I look at hybrid as a solution and hybrid as a category, I think that needs much more awareness among all our partners, and it's a very good solution because it gives you a combination of both the debt and equity. And in the hybrid, of course, there are different funds. Balance advantage fund is also, one very important category where investors, and distributors can promote. So what we did is that we have launched a hybrid specialist program, and that hybrid specialist program is largely, is more from creating awareness about all the solutions which are available. So that distributors and partners, they know that okay, what are different kind of solutions which can be offered to the investors. And we launched that in collaboration with American Academy of Financial Planning, and with them there is a joint certification program which has been launched. The beauty about this is that this is like a completely digital program. So one-to-one distributors and partners at their own ease, from their offices, home, while traveling, they can just log into that site and actually go through all those short videos which we created for different fund categories. So I'm very pleased to share with you that about a week back only we launched that program. We have already got more than 900 registration as of now. So I think about close to 100 people have already completed their certification. So and they don't need any kind of intervention. So they just need to register and they can take the benefit. So that's one of course initiative from our side which we launched to promote the hybrid category as such, particularly for the balance advantage fund, to promote and to make our distributors partners aware about our fund. Of course, we did our Bharat Yatra, okay, and covering more than 50 locations, where we met our partners, talk to them about this kind of model, and particularly, of course, that gave us opportunity to share our views also, on the market and share our perspective. The second is, was very important in terms of providing them the content and the collaterals in their own language. So we created one pagers, we created booklets, we created videos, but very, very importantly, that actually we created in the languages in which they wanted for their investors. So in all the vernacular language and most of the vernacular languages, we created all those collaterals, marketing collaterals, so that they can talk to their investors in their language, which is easy to understand, and with a combination of, like as I said, physical, which is Bharat Yatras, but of course now we are into a phygital world. So the way we are doing this conversation, I think there are numerous conversations which we're using the technology and on the digital platforms, talking about our product, talking about why it is very, very important from an investor portfolio, and sharing our perspective with them. And particularly, I think at this point of time, one of the aspects I understand, when we are going and reaching out to our partners, we have been getting that feedback that a lot of there is at this point of time a particular investor behavior which is driving a lot of concentration flows towards thematic funds and small cap and mid cap funds. And I think that is giving us opportunity to talk to them and say that, okay, don't look at it that it's a substitute for equity. I think BAF is an asset class itself. And like equity is an asset class, like fixed income is an asset class, balance advantage fund is also an asset class. So while you can continue to invest in the equity funds, but also depending upon your risk profile, invest a substantial portion of your asset allocation in balance advantage funds. And when you look at the entire category right now, it's very, very concentrated. While you have 30 funds which you mentioned, But when you look at in terms of the AUM, actually the top 5 funds actually constitute more than 85% of the AUM.
That's true.
So it's very, very concentrated. And therefore, I think when we are going and talking to our partners, one of the key highlights, and I want to take this opportunity of your platform to share with all our partners, is that when you look at the hybrid category, in fact, Canara Robeco has a very strong pedigree as far as the hybrid fund management is concerned. We have one of the oldest balance fund in the industry. So our balance fund and our aggressive hybrid fund, if you look at, has completed more than 30 years. And therefore, it was, when you look at any asset manager who has capabilities on both the side, which is both the equity side and the fixed income side, you will definitely come across the name of Canara Robeco as a prominent one. And therefore, we are also taking that opportunity to share all those perspectives with our partners.
Yeah, absolutely. And certainly a lot of initiatives which have been taken, for example, the certification program, and of course, the Bharat Yatra with 50 locations, and of course, educating more about hybrid, and of course, the balance fund, the aggressive hybrid, which you have completed 30 years. Clearly, there is a lot of history to hybrid fund management at Canara Robeco Mutual Fund.
Certainly, absolutely.
So my next question is that what are your thoughts around investment returns and investor behavior? Correct. And why should an investor look at Canara Robeco Balanced Advantage Fund at this point in time?
No, I think so. There are two questions in it. One is you have talked about a very important topic, and which is basically the investor behavior and the investment return, or if I can use that, the fund return. Correct. There's always a gap between the investment return and the investor, and there are different studies which has been done. And clearly, I think one of the reason that this difference is because of the investor behavior, and which is very normal, because we all are guided by and influenced by fear and greed. So this fear and greed is largely responsible for that investor behavior, and we have seen it not only in developed markets, but even in our markets. And if I have to just give you example to understand it better, for example, if you remember the global financial crisis, and somewhere, if I have to take you in March 2009, you will remember at that point of time there was all fear in the market, correct, and the markets crashed. And at those point of time, while from a valuation perspective it was very attractive, but what was the investor behavior? The markets actually from March 2009, if you look at in the next 1 year or so, actually grew up by more than 50%. Correct. But from an investor behavior perspective, because of the fear which investors had, they were actually redeeming from the market. And therefore, if you look at the industry net sales, was negative by more than 15,000 crores. Very true. Even if you take the recent example of COVID, and I am sure you will remember March 2020, when markets actually crashed, and from those declines, again, the environment was that suddenly investors were very fearful, and they said, okay, now nothing is done, and markets cannot revive. And in that fearness, while we all investors were ignoring the kind of valuations the markets were, and therefore what happened in those markets, I think actually the markets grew more than 50% in the next 1 year.
Very true. Yeah.
Correct. And what was the behavior of the investor? The investors actually redeemed more than 25,000 crores. So the net sales was negative by 25,000 crores. So they redeemed more, but the net sales was negative by more than 25,000 crores. So we have seen that, okay, definitely all of us investors, or maybe to that extent our distributors, asset allocators, they all are influenced, their actions, they have a behavioral bias, and the recency bias actually comes into play. And therefore because of this fear and greed, the kind of asset allocation which should be done, and the kind of investment and disinvestment which needs to be done, we tend to do completely opposite of that, and that results into suboptimal returns for the investors, and therefore this gap. Now, what is the solution if this is the kind of behavioral gap which has been there? So the solution is that, okay, if you have an objective model based allocation which can be there for the investors in terms of the markets, which can actually take the fundamentals into play, which can take into various market indicators into play, and then actually do a asset allocation, then definitely your behavioral gap can be reduced, and therefore you can be closer to the fund return. And that's how these balance advantage funds have come into play, and that's how these solutions are becoming popular. So in our model also, we have actually built in this three-factor model, which really guides us in terms of the allocation, and which can move, for example, between 30% to 90%.
Right.
So the fund manager can go as low as 30%, and it can go up to 90% as far as this model is concerned. The second aspect which comes into play is that even if as an asset allocator you want to rebalance it, there are operational challenges, and then there are tax implication which happens
Absolutely
to the investor. So how we can capture this? Another, is there any solution which can actually capture that automatically rebalancing can be done? Is there any solution which can be much more tax efficient? Then also the answer comes out is the balance advantage fund. So it is best of all the worlds, if I have to talk about it. So it gives you from a solution where the model itself is guiding, and there is a dynamic asset allocation which is happening, rebalancing which is happening in a tax efficient manner, and also it gives you a combination of both the equity and the fixed income in one product. So that's how these balance advantage funds can help in terms of making investor closing to the fund return and reducing that entire behavioral gap.
That's right.
Which has been there. Yeah.
That's right. And of course, investors should stop being a fund manager themselves.
Of course, they are professionals, and I think they can look at much more, varied factors which can be involved. And it is not only about asset allocation, because when you look at the return of any fund, the first part in a balance advantage fund is the asset allocation, but the second aspect is again in terms of how you build an active portfolio.
Correct.
So the stock selection also plays a very, very important role. So combination of this can be offered through a professional, and therefore through a fund manager, which can be bought through a AMC. Yeah.
Absolutely. So market always in a year gives about 5 to 6 opportunities where you kind of make superlative returns. And if an investor is not staying invested during that moment, then of course he loses out the entire year's return. So it is always not important for timing the market, but time spent in the market that is always more critical. And balance advantage funds, I do personally believe as well, fit into a wonderful way in the asset allocation process, where the entire timing, the market sort of a strategy is taken care by the product itself and the model itself.
Correct. Absolutely. And Suryan, I think from a Canara Robeco balance advantage fund, another, when we look at and designing this product, I think we also took that, what is the investor expectation as far as this fund strategy is concerned? And I think what we really heard from the street and from the investors is that while they wanted to definitely participate in the equity market, but their very strong emphasis was in terms of that how do you protect the downside, and they will look at a solution which can actually protect the downside. So when you look at the way we have designed this entire product, and the kind of model, three-factor model which I talked about it, this fund we have designed in a way so that it is aiming at 80% participation in the upside. But from a downside protection participation perspective, it is actually protecting 60%. Up to downside. So there is a lot of focus in terms of downside protection, and therefore it can be a very low volatile product for the investors because they do not like that kind of volatility.
Sure.
So it gives you a participation in the equity. So you participate up to 80% when the markets are up, but at the same time, when the markets are down, it actually gives you a much better downside protection.
Yes.
And therefore, if you complete a full cycle with these kind of funds, you will have a far better overall investor experience will be very, very good.
Totally.
And at the same time, apart from the equity, it gives you a stability of the fixed income.
That's right. That's right. Absolutely. So Gaurav, today through this in conversation, what message would you like to give to investors, distributors, advisors about Canara Robeco Balance Advantage Fund, NFO in particular?
No, absolutely. I think, as I said earlier, we believe that balance advantage fund itself is an asset class. And that is, I would urge all our distribution partners, MMD friends, to look at this asset class very, very seriously. I think it is just about 2.7 lakh 5 crore. And, this asset class itself actually can become as big as equity because it actually is closer to what the investors are looking at. If you look at while the industry is at more than 60 lakh crore, but when you look at industries like banking or other financial, they are at least 4 times bigger than what we are. So if any product which is closer to what the investor is looking at, what they are looking at is the stability of it. They are looking at participation in equity, but they want a downside protection. This balance advantage fund can offer that to the investor. So from an investor perspective, it is good because it gives the stability in the portfolio. It is like a winning player in their entire portfolio, because the same fund can actually do an aggressive betting and can hit boundaries when it is needed, can also actually do the single runs when it is needed to keep that wicket. The same fund can actually do the bowling also, and the same fund can actually do the fielding also. So you don't need too many players if you have balance advantage fund in your portfolio.
That's right.
So it is a must in any investor's portfolio. And from a contextual perspective, particularly because you talked about that investor gap and investor behavior, we talked about it. And when we look at the investor behavior right now in the market, there is a very high concentration towards certain themes and those narrow themes which are there in the market. So I think it is very, very pertinent for all our distributor friends to go back to the investors and definitely recommend this kind of allocation into these kind of funds, which can provide stability and at the same time can also give an opportunity to participate in the markets.
Absolutely. Totally agree with you on this one, Gaurav. So for the viewers, the Canara Robeco Balance Advantage Fund opened on 12th of July and it's closing on 26th of July. And so Gaurav, thank you very much for sharing these wonderful insights about the model, the three-factor model, the auto switch, the smart STP, and all your views about why hybrid funds and why balance advantage funds as a category. So thank you very much for joining in conversation today by Suppose and taking out time for this.
Thank you so much, Suren. It's been a pleasure talking to you. Thank you very much.
Thank you so much. All the best.